Let's say you're an early stage founder trying to raise capital. It's a pre-seed round or a seed round. Think friends and family. How do you know whether it's better to raise capital from angels or venture capitalists?
That's a great question, Janelle. So in this episode, we are going to discuss the pros and cons of raising from venture capitalists versus angels. And by the end of this episode, you should have more context to decide for yourself the right path for your startup.
Okay, let's dive in, Eric. What are the benefits of raising from angels?
All right, first, I think it's good to define what angels actually are. So there's a very specific and weird definition of what an angel investor can be here in the United States. And it's specifically an individual that has accredited investor status. And usually that means they have $1 million of investable assets or a fairly large salary. I believe it's like $250,000 and more. If you're a couple, it's something like $350,000 more combined. Go ahead and Google it. So those are the folks that are able to technically angel invest into your startup. And it doesn't have to be people that work in tech. They can be your dentist. They can be your doctor. Fun fact, Janelle, we've actually pitched Elizabeth, my co-founder's eye doctor, several times about investing in Hustle Fund as an accredited investor. And that person has said no every single time.
Sorry to hear that, but wasn't it her dentist?
Oh, no, it's her eye doctor. Very, very common misconception. So the benefits of angels is that they are making the decisions with their own money and don't have any shareholders to consult with. Now, this is very important because it's your own cash and you are the agent to decide your own capital. The decisions tend to be much faster than what you would find with venture capitalists who do have shareholders, and there has to be very specific processes generally in order to make these decisions. And it's a little slower over there, but we'll talk about the VCs a little bit later. Often I see our founders tell us that they need just one meeting with an angel even to close this money. So it can be pretty quick. And because angels are often individuals who can't write massive size checks, they usually are also more open to collaborating with founders to help them with their real problems. And here's what I mean by that. So maybe you're an angel and you can't write a check larger than a few $1,000 even. For a founder, that could be okay if the angel is willing to roll up her sleeves. She might be, let's say, a product or engineering expert, can help you in hiring your teams or looking at your product roadmaps. That is serious value add that goes beyond the capital that more angels you'll find are willing to do than a lot of other larger institutions. So there are some pretty serious benefits of angels. We tend to find, Janelle, that angels are actually our most common co-investors at Hustle Fund. All right, Janelle, so it's not all peaches and roses when it comes to raising money from angels. What are the cons of raising from angels?
So your angel check sizes typically range from 5 to 50K. And while that's great, it can mean you have to pull together quite a few people to hit your fundraising target. So that's one con.
This is kind of a big problem sometimes for certain founders, Janelle, because if you're trying to raise $1 million off $5,000 checks, that can be a lot of people that you'll have to cat herd. So definitely a big con there.
Yeah, the other thing that you want to think about when raising from angels is that when you do follow-on rounds, the check sizes start to be too big. So your angels won't necessarily be able to write checks into those follow-on rounds.
All right, Janelle. So we talked about angels. Let's switch gears and talk about VC funds. So what are the benefits of raising from venture capital?
Well, with Hustle Fund, it's cool swag, right? That's the major benefit.
That's one part of it, I think. And we do look pretty dripped out today. But there's got to be some other benefits too, right, Janelle?
Yes, definitely. So VCs are financial institutions designed to invest into startups. And VCs have investors called LPs, limited partners, and they are stewards. The VC is stewards of that capital. And so they need to hopefully invest into good deals.
Yeah, so we have a lot more money than angels. That's certainly a benefit, right?
Yeah, so the check sizes are larger. And like we said earlier, you don't find that with angels. It can be tens of millions of dollars as you progress through your fundraising stages.
And I think that is a pretty important point. Angel rounds tend to be just one and done when you're an angel. You don't have like infinite money in your bank account. Not to say that VCs like Hustle Fund have infinite money either, but we tend to have a strategy where we are open to investing in second rounds and third rounds and fourth rounds afterwards. So That seems like a pretty good benefit.
And another big benefit, and we have found this at Hustle Fund, is that it's not just capital that founders need, it's also network. And so when you tap into VC firms, they're often very well connected. They like to hang out and wear their Patagonia puffy vests. So network is another major advantage of getting capital from a VC firm.
That's right. And, at the later stages too, VCs will get pretty involved. I mean, they can roll up their sleeves as well. And this often can take the form of board seats. Isn't that right, Janelle?
Right. So similar to how you want to get angels involved earlier who may be able to roll up their sleeves and help you out, well, VCs are going to write those big checks. And they may also be very good guides. So giving them a board seat as a part of your arrangement, as your deal, can really help you as you look into the future and grow your business.
That's right, Janelle. So think of your VCs as conciliaries or, close advisors, a trusted network when you give them that board seat. But I do want to clarify one thing, which is it is unusual to offer a board seat to a VC at the early stages when you're still at seed. That stuff tends to happen around Series A, but it's something to, I think, look forward to if you can find the right kinds of partners at that stage.
So Eric, a lot of positives of working with a VC. There's got to be some downside too.
Ooh, Janelle, I feel like you're shading me a little bit as a VC. Are you asking what are the negatives of working with someone like myself?
Kind of, yes.
Okay, well, there's a lot of negatives. Let me not speak for necessarily Hustle Fund, but I am a representative of the industry today. So the first part is something that we had briefly highlighted earlier in our conversation, which is the slower decision making. When you're a venture capitalist like myself, you're basically a fancy wealth manager for other people's money. That really is what this job is all about. Yes, I'm kind of taking a very jaded look at this. Yes, we do invest in great teams and innovation, and we want to see the world evolve into something better with the capital that we deploy, but we are stewards of capital. And as the result of being stewards of other people's wealth, we have to make our decisions super carefully. At Hustle Fund, we can generally make a decision on a company within a week, but I'd say that's pretty unusual, and decisions tend to be slow. In addition to that, too, this is an industry that is very momentum driven. And what I mean by that, maybe the best way to illustrate this, Janelle, is I can share my favorite joke with you. Is that okay?
Yes, please.
Okay, Janelle, how many VCs does it take to screw in a light bulb? The answer is, who's the lead? Only Janelle and maybe some of my children will laugh at my jokes every once in a while. But the idea behind this is there are a lot of VCs who also operate based on perceived momentum of the deal. So maybe they're going to be a little bit quiet or reticent or reluctant to aggressively invest in your company unless they feel validation from others. Again, at Hustle Fund, we don't like to play this game. We will invest if we have conviction about the team, full stop, even if we're the first check in. Sorry for the shameless plug there. But this is something that's really normal. And it does slow down the decision making quite a bit when you're dealing with VCs who are trying to sense some form of momentum in their decision making, or in the deal, I should say. The second con of VC is that it often is an industry that will apply pressure on founders to continue to raise capital. Janelle, do you have any sense of why this might be the case?
It's all about the economics. So when you're investing, you want to see growth and future rounds. I was talking to a founder just the other day who said, oh, I had no idea that when I finished my pre-seed and my seed rounds that I should have already started planning for my Series A.
Yeah, you got it. And I think really implied in that statement too, Janelle, is a paper markup. So this idea goes as follows. Let's say that we are seed investors in Janelle's company, and we price her at, just for easy mathematics, $1 million valuation. She kicks butt with the capital that we provide to her. She's growing the business really well. And again, for easy mathematics, she decides to do another raise at a $10 million valuation. Well, the reason why this is important for venture capitalists to show this kind of progression, even though it's only on paper. This is not like real money yet. This is just saying like, yeah, you're worth $10 million now. Here's a little bit more cash. Is that this is something that VCs need to show to their investors as stewards of their wealth, that they are indeed doing their jobs well by investing in talented founders that can show markups of their valuation over time. And that is an implicit pressure that VCs will put onto many founders, usually because they need to also prove that they are good stewards of capital too. And this is where you can find misalignment behind what's good for Janelle's business or the founder's business and what's good for the VC. Because you could be in a business environment where it makes sense to slow down, to do a little bit more customer discovery, to not necessarily turn on the gas when it comes to customer acquisition or user acquisition, et cetera. Those timelines of what's good for your business may not always fit the timeline for what the VC needs to expect in a high growth business to prove their value to their investors. And this is actually one of the reasons why, Janelle, a very common reason that VCs will pass on a founder is because they'll say it is not a VC backable business. That's not meant to be an insult. This actually just might be the nature of the company requiring it to have different kinds of speed in terms of its growth that may not conform to venture speed. Now, there's one last con that I got to cite about venture capitalists, because I love to make fun of my VC colleagues, is that there is a variance of quality when it comes to VC. All right, I'm not going to put any lipstick on this pig here. Some VCs are straight up lazy and won't help at all. They give you cash and then they kind of ghost you and expect you to do your job and return lots of money. Some are also kind of a negative force. I mean, I've had my share of conversations with VCs in the past as a founder where I was like, you're literally not adding any value to me. You are sending me random articles about competitors and expecting me to respond at 2 a.m. in the morning. Why is this helping me at all? But that says, do not necessarily shun all VCs based on those statements. There are some really, really amazing partners out there who are not necessarily playing this game of trying to get their markups, like applying that kind of pressure, are truly in it for the long term, for the relationship with those founders. And if you can find them, they're delightful to work with. There's some silver lining around these dark clouds that I'm painting as well.
So we've highlighted some of the big reasons why you may go with angels versus VCs. In summary, if you are a founder who's in the seed stage or pre-seed stage of fundraising, we'd recommend probably spending more time on the angel side of things to start. It's okay to have a lot of people investing in your company at that point. And, we call these party rounds. So might as well make it fun when you're getting started.
Yeah, that's right. And I do think in general, Janelle, that VCs are a little bit better to engage in the later stages when you're raising more money. Maybe at the pre-seed stage, it could be sensible to focus more on your angel friends or possibly family members if they can participate. But of course, please make room for Hustle Fund. I am obviously personally biased, but I think we are really friendly to founders, and we're trying to create an institution that is helpful as possible at the very beginning of your company formation.
Hey founders, thanks so much for tuning in to today's episode of Uncapped Notes. And we'd really appreciate it if you leave us a comment. Let us know how your fundraisers are going, and like and subscribe to Uncapped Notes.